What's up, guys? Looking at the aftermath of Navan IPO, I can say this is pretty expected, but let me give you some reasons why I think this didn't do too well. Overall, the market itself hasn't been doing too good today, so that could be another reason why investors are selling off risk-on environments right now. But mainly the reason why I decided to step out and not do Navan IPO, even though I was bullish basically on almost all the IPOs, even Phoenix, was due to hype and sector allocation along with financials. So a lot of these IPOs have been running straight on hype. And some people say, oh, the financials don't matter or something like that. But a lot of the hype is actually based on financial metrics. Like, for example, when you heard Figma, you always heard the term that they were in partnership or being used by 95% of the Fortune 500 companies. Basically a clear-cut example of good financials and good having good backlog, having good partnerships, and also is in a booming sector since there's also Adobe. That was just a clear-cut winner. Or something with terrible financials like Gemini, losing money, bad platform, but an okay sector with like Coinbase doing well, but just the hype of being a crypto company was enough to push it up for that one day before it tanked. Well, Navan, it's being one of extremely mid and terrible financially company, taking on way too much debt, and the CEO is absolutely a nut job. I've talked to some of the workers in the space. If you saw my insider information video on Navan, you don't know what I'm talking about. But also there's no hype. No one wanted to get into a travel agency paying off business or whatever exactly they were, giving Klarna or StubHub vibes. The only thing they had for hype was a supposed AI platform, which didn't even work, by the way. 3 stars out of 5 on Trustpilot, I think it was, or Glassdoor reviews. Pretty bad platform. I heard some pretty reputable people saying, oh, 30% year-over-year growth, which sounds good, but if you compare it to its sector, the other main 2 competitors with the same exact market cap had 91%, 80%, and 100% year-over-year growth. That is 3 times compared to the sectors. And when you look into these sectors, well, you saw that even the ones that did have 100% year-over-year growth have only gone 5% up in the last 5 years. So no one really paid attention, and these sectors haven't really been moving at all. Versus something like Phoenix IPO, which was 3 times undervalued, had the same amount of year-over-year growth as the companies 3 times the size of them, pulling in a $1 billion, pulling in a bunch of revenue, the same size as the company that's 6 times as big as it. And the ones in the stock market and the online for-profit education platforms have ran 500% in the last 5 years, 61%, 100%. Like, this sector was already booming. Lastly, the reason is there's going to be other IPOs. Like, I'm an IPO dude, so a lot of people were saying get in this or I'm going to buy a couple. Personally, I just bought 1 share just to see what was going to happen with it. But yeah, I stick to my plans and fundamentals. I'm not just going to go on an IPO just because one's coming out, right? There's going to be plenty more in the future, hopefully Discord coming out soon. But yeah, I stick to my own values and I do it on a metric by metric basis. I don't have any special privileges for any of the IPOs, even if it's only one coming out.